How's it going, everybody? It's Stas here. Welcome back to another video. So today we got to break down some leaps. We have to go over what leaps options are, why people buy leaps options, and like you all saw in the title, we have to go over 3 stocks that I'm looking to buy leaps options on in 2022. So if you guys find value, hit the like button, subscribe, join my Patreon if you guys want all my buys, sells, call outs, morning update videos, Discord access, plus more. All of that's on Patreon, link down below. And you guys could also get 2 stocks free from Webull and $50 free from M1 Finance, also linked down below. And with that being said, let's get right into the video. So before we talk about the 3 stocks that I'm looking to buy leaps on, and the first one is on the screen. It's not a secret, guys. It's SOFI. Before we talk about these 3 stocks, let's go over what leaps even are. So I'm sure some of you, maybe a lot of you, don't even know what leaps even stands for. LEAPS. This stands for long-term equity anticipation securities, and these are options, right? Call options. You look to buy leaps when you're bullish on a stock long term. That is in essence what it is, and it's a little bit more specific than that. These are options contracts that expire in more than a year. So a leaps option is not a call option that you buy today or that expires in a month from now, right? It's not that. It has to expire in more than a year. So 12 months, 16 months, 2-3 years, that would be considered a leaps option, right? And again, if you're very bullish on a stock, you think it's going up in a year, 2-3 years from now, buying leaps is a good strategy for you. All in my opinion, of course. This is my opinion. I'm not a financial advisor, right, guys? And the premiums that you pay for leaps are higher than those for standard options in the same stock. So, for example, if you're looking to buy leaps on SOFI, let's say you want to buy them for 2 years out, you're going to have to pay more in premium because you have a lot more time on your side, right? And when it comes to options, theta, time decay, is huge. If you have more time on your side, you're going to have to pay more in premium, as opposed to, let's say, if I buy SOFI options that expire in a month from now, I'm going to pay a lot less premium, but I'm taking on a lot more risk because I don't have a lot of time, a lot of theta on my side. And when you're selling options, which we're not going to talk about in this video, you want theta to eat away at the options, because as a seller, you want it to expire worthless because you keep your shares. If you're selling call options, which we're not going to get into that in this video. I do have some covered call videos. If you guys are interested, just go on the search bar and type in Stas or Fest covered calls. A couple of videos will pop up. And like I said, buying leaps options is a great way to make a longer term bet on a stock. And I didn't mention this, but I'll mention it now. It's great to do this without allocating. You don't have to allocate too much capital up front. So that's why a lot of people trade options to begin with, right? Because they don't want to go buy 100, 200, 300, 400 shares of a stock. They rather just buy a couple of contracts, call option contracts, that gives them control of that amount of shares without putting as much money down, if that makes any sense. So now that we got a little bit of what leaps options are, a little bit of a rundown there, let's actually break down some stocks that I'm looking to buy leaps option contracts on, guys. So number one, like I said, is SOFI, ticker symbol SOFI. This stock has gone down a lot from $25 back in June. Now it just hit $12.66 last week, guys. And full disclosure, I'm already a shareholder, which means I actually have shares of SOFI already. But that doesn't mean I don't want to add some leaps to kind of complement my share position here. So let's go over to Robinhood. And let me tell you this, guys, I personally do not use Robinhood, so let's get that out there right here in the beginning of the video. But I do like the way that they show their options chain, and when I do make videos on options, it's just way easier to look at Robinhood because they have things so simply set out, and the user interface is incredible. So let's go to SOFI and see what their options chain is looking like right now. So as of now, SOFI is trading at $13.20. Let me see if you guys can see what I'm doing here. Let me make my face a bit smaller. So what we have to do now is go to trade options, which is right above my head, and we have to adjust the expiring date. Because again, leaps are for over a year. So we can't look at anything in 2022, but we can start looking at the expiration dates in 2023 and beyond, and we do have 4 to look at. We have January 20th, 2023, April 21st, 2023, December 15th, 2023, and January 19th, 2024. So those are actually 2 years out. So everything here, the last 4 dates, would be considered leaps options. So for me, guys, I was actually looking between the April and December dates. I kind of want maybe a year and a half at least, maybe even closer to 2 years. So a year away would be January 23, which is literally almost exactly a year away. So I might want a little bit more time. So I'm going to look at April, and I was thinking about a strike price. You guys can see here the strike prices are the difference between each one is $2.50. So we have a 15 strike, $17.50, $20 strike, $22.50. So for SOFI, I was thinking $20 strike. And again, I have shares in SOFI right now. My average cost is maybe 14 flat, very low 14s. So I'm in a good position with my shares, but now I want to get more of a leverage or put a leverage bet with these leaps options. So I'm looking at $20 for April 21st, 2023. I'd have to pay about $2.80 per contract, which means I'm going to have to pay about $280 per contract because you take the $2.81, you multiply that by 100 because each options contract is 100 underlying shares, and that would give me about $280, right? I'd pay $280 per contract. And honestly, guys, I'd probably buy multiple contracts, maybe about $1,000 worth, $2,000 worth here on SOFI to give me a good amount of contracts and a good amount of control of multiple hundreds of shares here. And if this bet were to hit, it's not going to return me 50%. Like, let's say the shares would return me. It would return me, we're not going to go too deep into how much I would actually make, but let's say maybe 200, 300%, something like that. So options allow you to pretty much leverage your bet, and you don't have to put as much money down up front. Again, I own way more dollar value in shares than I would in the options, and the options might return me similar dollar value, for example, right? That's kind of the way I'm looking at it. So I'd probably put maybe $2-3 grand into SOFI options, or leaps rather. The next stock I'm looking at is PayPal, which if I pull up PayPal, you guys can see this stock has been obliterated. If I pull up the year chart here on PayPal on Robinhood, it says here on Robinhood it's down 26% over the past year, which is a big drop there. And I think it's down even more. If I go back here to, you guys can't see ThinkOrSwim right now, but I'm looking at it on ThinkOrSwim. Let's see here from 312 down to about 175, where it bottomed in terms of PayPal. It is down 43%, which is nuts. So it's down even more than the 26% being shown here by Robinhood. So let's see what their options chain is looking like. So if we go to January, they probably have more options than SOFI here. Let's see. I'd probably want to do about a year and a half out on this one as well, maybe a little bit more. So let's look at September 15th, 2023. Let's go down a bit. Wow. As expected, the premiums are a bit more expensive, a lot more expensive than SOFI. So if I go up here and say, okay, PayPal's at 178 right now, let's do a $200 leaps option. That's simple. You think it's going to go over 200 in a year and a half? I definitely think that is the case. So if we take 27 $200.55, which is the $200 September 15th, 2023 strike price, or not the strike price, the premium. We have to pay $27. So if we multiply that by 100, we're looking at about $2,700 right off the bat, which is what we're going to have to put down for this particular Leaps option. And for me personally, guys, I already have PayPal stock like SOFI. I own shares of PayPal, so I probably wouldn't go that hard or that heavy in these Leaps options. Maybe I'll do just 2 contracts, literally. That's it. Maybe even one. $2,700. I might put down maybe a little bit over $5,000. That's what I'd do. And me personally, I'm not all in on options. Not my whole entire account or my multiple accounts. I'm not all in on options, but I would want to, let's say, put maybe 5-10% of my overall portfolio. Maybe 10% is pushing it. Maybe 5%. In strategies like this, Leaps, and SoFi, PayPal. I wouldn't want to get it to 25%, though, 30%, because the risk here is if these options don't hit, sure, you could maybe recover 50% of your losses, or you could recover something, but you might lose everything. That's the risk here, so I don't want to go too heavy, but overall, I'm looking at the September 15th, 2023 $200 PayPal Leaps for $27.55 a contract here in terms of premium. Not too bad. And if you think that $27.55 is a lot, wait till you see the Google premium. This is insane. I'm also looking at potential Leaps here in Google. If the stock market sell-off we're seeing right now in real time, if it gets worse, let's say Google goes down to $2,200 a share, $2,300 a share, heck, maybe even $2,500 a share, I'm going to be considering buying some maybe March 17th, 2023 Leaps, maybe for, I don't know, maybe $2,800, maybe $2,900. I don't know yet. But this is kind of what I'm thinking, my thought process here. Google being my favorite long-term stock. It's my biggest long-term position with shares. I might consider buying a Leap. And these are very expensive. Let's be honest. These are very, very freaking expensive. Look at the premium for March 17th, 2023. You're going to need $300 a premium, which if you take 300 times 100, you're going to need $30,000. That's a lot of money just for one options contract, a Leaps, and this is one that I'd just buy one. I'd just buy one contract, maybe for 30 grand, maybe for 25 grand if I were to get a little bit more bullish here. We look at the $3,000 strike price, $3,050, $3,100. Now we're talking a little bit more reasonable. If you look at $3,200 strike price, the premium's $188. So to fork over $18,000 is not as bad as $30,000. But mind you, if you're forking over $18,000 for the $3,200 strike price, you're taking on more risk because it's a higher strike price, but there's more reward. So that's kind of some ideas, guys. I'm not pulling the trigger on these tomorrow, but I'm looking at them over the next couple of weeks, and I'm getting really close to potentially buying some Leaps here, especially if the markets do start selling off a bit further. So that's it. I'll wrap up the video here, guys. We're about 13 minutes in. Perfect. If you all enjoyed it, make sure to hit the like button, subscribe, and drop me a comment. Do you guys want to see more options content? I would be very happy to make it for you. Let me know in the comments down below, and feel free to join my Patreon. If you guys want all my buys, sells, call-outs, morning update videos, more access to me throughout the day, a private Discord as well that we're trying to build there, it's your chance to join the Patreon. I mean, look, it's down below. Give it a shot. What's there to lose? Join it. It's at stocksurfest.com/Patreon. And if you guys want some free money, $50 from M1 Finance and 2 stocks from Webull, that would pay for multiple months of your Patreon. So go check it out down below. I appreciate you guys as always. I'll catch you all in the next video. Thanks for watching. I'll catch you guys later on. Happy Martin Luther King Day. Peace out.